Good morning again. It is time for the daily walk and talk. And as estimated yesterday, the market went down even more. So for Bitcoin, that means if I checked this morning, it went down to 108, almost touching 107 on some exchanges. So we're still going down. Some of the other assets have, of course, even been going down much more. Hyperliquid was quite stable, surprisingly, but most of the assets went down quite heavily. So again, the questions I get in a lot of comments is the bull market now over? Will we see alt season? And yes, we discussed this in almost every video now because this seems to be the main question people are asking, right? So I don't believe that this is the end. If you have been watching my videos from last week or the earlier videos, I estimated that the market will probably go down one more time before it is time to go up. Now the fear and greed index, I think it fell to 32. I'm not sure if 32 is extreme fear already. It must be at least fear to the border to extreme fear. So this is basically a good sign. So we have taken out basically all the leverage out of the system. We have reset the fear and greed index. We have reset the RSI, the relative strength indicators, and we have cleaned up the environment. Loads of people are leaving again. Loads of bears see this as their confirmation, saying that they always told us that the bull market is over, but let's give it some more time. The October charts have always been very good. So I've told you that most of the time in October, we see two-digit green development. So all should be fine. And this is the last reset. So all the assets or most of the assets have gone down very heavily, especially very extreme for Ethereum holders. Ethereum dropped to around 3,800, if not lower. I have not checked the stats, what it has done in the night. Maybe it dropped lower, but nobody was thinking that Ethereum will go below 4,000 again, right? So for a lot of people, probably they get wiped out because they never thought that Ethereum will go down that heavy. This is not that heavy, but a similar situation when you remember in summer. Ethereum dropped, I think, below 1,300 this summer, and loads of people got liquidated because this is such a unrealistic price level. And now again, people thought everybody is preparing for the bull market like we also did. So probably we can learn something in this. We should probably not front run the bull market or the alt season. This is what I learned again in the latest weeks or days, because if you position already without the trend being confirmed, then probably your positioning is correct, maybe in the assets, but it may not be correct in the timing. So it's probably better to wait for the breakout or the confirmation. But then it comes down to the point, what is your confirmation, right? On which time frame are you trading? What indicators or signals do you use to confirm your breakout? And even if it breaks out, it can retrace. So the market is basically playing with us. And now that all these big investors, these big institutional players are coming into the market, the game is even much harder to play because they know how to play this game. They know how to take out liquidity out from the market, put it in and so on. I would suggest to at least have order blocks on your trading charts if you trade, because with the order blocks, this system will basically allow you to see where institutions have big money. So where it's very likely to boost the price up or push it down, meaning that if you're using order blocks like this, algorithms like the Lux Algo indicator, where you can have some free ones, then if you put this on your charts, it will help you to understand where liquidity is very likely to jump into the market. So if you, for example, look at your chart, you will see at a certain support level, there's millions and millions of dollars waiting to get swiped. And institutions trade in a different way. Institutions have to make sure that they are actually bringing in their orders into the market and do it in very small increments at certain levels. And they don't need much percentage in gains, because if you're putting in millions and millions into the market, you don't need to make 5% or 10% or 50%. If they make 1% or even much smaller amounts, it's good for them. This is why it is important for you to monitor these levels. So they will basically set up a level where they will, it's an area, it can be quite a broad area covering hundreds of euros up and down, meaning that, for example, now they have order blocks. If I talk about Bitcoin, so they had order blocks, 3 big order blocks going down to 107. So the first order block, I think, was at 109. The order block was taken, meaning that they have bought a lot of the orders at this level. As soon they have bought everything, the order block will disappear because the system will realize that these orders are bought. Then, in a lot of cases, it is likely that the price bounces up from these order blocks to go to the sell side order block, meaning this is where you can see that the institutions have put their sell orders. So they normally trade between these levels. And is most of the time the same as you would draw like steps on your chart, meaning that you divide your chart into 3 or 4, or you draw trend lines, and you will see that this very often matches the liquidity zone, so the order blocks. So it's very interesting. So in the case of Bitcoin, they have been at 109, then $500 below, and then again at around the high 107,000. What happens then is they go into the order block, they take the orders, and then it's possible that they go through all the order blocks. So the order block does not say, or it's not necessary that the price will straight go up after the order block. Most of the time, the price comes back to confirm into the order block, and then very likely the price goes up and should hit the upper target of the institutions. Not that it's going up straight, it is like a magnet pulling it up. How can this help you? So if you use different indicators or different kind of methodology, then if your indicator basically tells you to buy, but you see that there is a very heavy order block, like $50 higher, and a sell side order block, it's very likely that the price is not able to get pushed through that order block. Also, it's a good idea for most of the assets to always have the Bitcoin chart also open if you trade crypto. Most of the time, most assets are mirroring Bitcoin, right? So if you are in a super trade, the price shoots up and there is no news. So it's not news related, it's just the price of the asset goes up and the Bitcoin price starts to go down, most likely the price of your assets that you're trading at the moment will also go down. And also the order blocks of Bitcoin oftentimes impact your assets that you're trading at the moment. So I would also suggest to look at Bitcoin all the time. And if you see there's heavy resistance or Bitcoin is very weak or Bitcoin starts to fall, adopt this strategy, this knowledge to your coin as well that you're trading. Most of the time, something similar will happen. There's cases where it goes into a different direction, but check it out for yourself. Go to CoinMarketCap and check the statistics. So if Bitcoin goes down at a certain day, if you sort it, you will see that when Bitcoin is down, there's not a lot of assets really up. Yes, there's always 3, 4, 5 assets that are up 100% or 50% or 20%, even when Bitcoin goes down. But the majority of the assets will be down as well. So today, for example, there's, I think, 2 or 3 assets gaining 20%, and then there's about 10 assets that are in the range of 2% to 0.1% up. So this is the case for the connection with the asset, basically. So be careful if you're trading any asset, always have Bitcoin in mind. So should we now pack our stuff and leave the market? I think there's a lot of opportunities at the moment. Depending what kind of trader you are, it's like Christmas now for you. If you always wanted to buy, for example, Hyperliquid or Pump.fun, but I'm talking about spot buying now. So buying and holding, not trading it, because if you always wanted to have these assets, they are now down 40, 50%, right? So if you're a spot buyer, meaning you're holding the assets for a longer time, you can start to buy the assets, I would say. Maybe they're falling some more percentages, but for a spot buyer, if you scale in slowly, meaning that if you have $10,000, you buy 1,000 now, you wait until it drops a little, maybe it recovers, doesn't really matter. You need a plan and then you get into the asset. If you are a leverage trader, then I would not suggest to buy it now. I would wait a little longer. Now it's really still unstable, and there's people estimating that Bitcoin will at least go to 107. This would just be $1,000 away. But there's also other people saying that it could hit 100K and even go below. So let's wait for that. Let's not jump into markets, because with a leverage trade, never forget, if you put on even just very little leverage, then you are wiped out. Meaning, if you just have a 2x leverage, then a 50 or even lower percentage in downdraw is basically wiping you out. And most of the people trade with the 5x leverage. That would be 20% in drawdown. And we have seen this now over the latest days. We have seen it even for big assets. I think Ethereum fell around 20%. So you need to be very careful not to get wiped out. So in general, I would not suggest to hold most of the assets after this cycle. To explain what I mean, if you buy, for example, now Hyperliquid on a discount or Pump.fun or any of these coins that you're not very comfortable in holding or you're not very knowledgeable. So it could be that you buy assets and you exactly know what you're talking about. Example would be Chainlink. If you buy Chainlink, then this is an asset which has proven to be their multi-cycle, and this asset will have its big time probably next year. The same with WorldCoin, I estimate, because the AI and the problem that we cannot really tell what is AI and what is not AI anymore. So very soon, I guess these social media platforms will implement some kind of form of we having to prove that we are human. So there's projects that will survive. Of course, also Solana will have now its very big time because it's getting implemented into the stock market, probably because they will handle all the transactions on the stock markets when the stock market will go online. Ethereum will of course be there, Bitcoin will of course be there. And then there are not too many assets if you have not researched it in detail and understand what the next narrative will and would be, that you shouldn't hold most of them. There are some assets you can hold multi-cycle, but an exchange like Hyperliquid or Pump.Fun or whatever, you cannot hold them, even if they will do quite well till the end of the year or maybe still to the first quarter of next year. You see a good example now with Hyperliquid. When Asta is coming in, within 24 hours or within 2 or 3 days, Asta managed actually to overtake Hyperliquid in trading volume. So, and this happened in about 1 week, right? Just imagine you're going through the bear market and maybe this startup or this coin or whatever it is, you really like it, but they are not very good in handling reserves, and maybe the Ethereum price or whatever price that they are holding their assets in, maybe their own token is falling 90%. And then it gets very hard for these teams to survive the bear market, right? So keep that in mind, that most of the assets you're holding at the moment, you should not hold multi-cycle. You should try to get them out or sell them at the peak, meaning if we are now getting into alt season in the next 1, 2, 3, 4 months, depending. December, I'm not sure. We have to look at the market again and again and again. So if you have the feeling I'm changing my mind sometimes or saying different things, this is possible, but this is needed. We cannot really predict anything. We have to modify our estimations on the facts or on the situation we see today. Nobody could have estimated or nobody could have foreseen that exchange like Asta coming out and overtaking. Or we had the situation back then, Pump.Fun, suddenly Bonk came out and overtook the market share. Now Pump.Fun is taking the market share again away from them, and so on. So, and this is happening in very, very tiny, very, very short periods. So I hope this makes it very clear for you to understand that holding multi-cycle can be a very bad idea. What is a good idea is if you really have knowledge about coins that you buy in the bear market. So you know a lot about the project, you have some dry powder, you take some profits, and then the coin falls very likely 60, 70, 80%. If you're then convinced that they will work through this and will come up in the next cycle, and you are confident about the narrative, so you know that this will be needed. These days, it is also very important to understand what AI will do in the industry. If you have certain projects that are established already, but the technology can be replaced by AI very easily, you have to be careful. This is the same for the stock market. Now there will be a lot of, especially the software giants, that will be replaced because a small company can come in very easily and wipe code something or have just a handful of developers and basically wipe out their business model. Hype did the same with a lot of these centralized exchanges. This is a very small team and they just set up their exchange. I forgot what the company is. I will research it. There's one company that is actually developing a DEX, so a decentralized exchange like Hyperliquid, and you can basically just take it. It's open source. They provide the liquidity for you, and you can basically trade on this exchange. So you can modify it with your logo and so on, and you have your own DEX. I'm not sure how this is legally, so I cannot recommend to get into it. So I'm not sure how things will work out. Theoretically, if you block users from certain locations, you should be fine. But, this was a very gray zone and is still quite a gray zone also for these new business models like this. DEXs that are really booming and taking away so much market share. I'm sure they are on the radar of the regulators, so I can't recommend to go into that. Look at the business model of this coin. Also, if you look for older coins like XRP, Cardano, ask yourself, what have they done over the latest years? Who needs them still? Now we have all this stablecoin narrative. Do the banks still need XRP, or is this still accurate? Look at ADA. Look how many users do they have? Who is using it really? How fast are they moving? So if you compare CoinMarketCap, the start page, the first 10, they have been changing very heavily. It is like in the stock market. In the stock market, it is the case that you have companies listed that do a lot of business. We had GE or we had IBM and stuff like that. Keep in mind that these companies don't exist anymore. And this is the same for the crypto market. You have to start to treat this kind of crypto projects like it would be the stock market, because this is the next stock market. And it's easier to understand, it's easier to get the data because it's blockchain, we can see the users. A lot of stock investors say they can't value crypto projects, but I see it the other way around. How can you value the stock market? And it's clearly you can, but it's overvalued like a lot of times, as you know, right? And there's a lot of issues with paper certificates or with shares that have been issued too much. There was a quite interesting case where I think Porsche bought Volkswagen or Volkswagen bought Porsche. I don't know what it was, but then they discovered actually that they issued many more shares that actually they should have issued. And so there are a lot of cases where you can't prove anything, and the blockchain, it's easier to prove. So this is my suggestion for you for the coming weeks. So you can actually, take a little time, watch the market, don't jump in too early. If you're a spot market buyer, you're planning to hold it till the end of the cycle, you can slowly go into. If you're a leverage trader, wait till the market settles down. I will continue to make some videos, so if you are subscribed and if you have the bell notification on, you will immediately be notified when something is happening. Also, if you want to get a feeling about the market, so not just a feeling, but actual data about when the bull market will be reached, you can go to Market Peak AI. We have developed this tool helping you to understand when the top is in. Everybody is panicking now that we are going into a bear market, so not a lot of people are at the moment interested in finding out if the bull market is oversold. But you will see. I promise you, in 1, 2 weeks, 3 weeks, everybody will be on the other side again, and everybody will panic and say, oh, now it's over, and now this is the peak, and this is the peak. So it always shifts. So if you want to get the data, Market Peak AI, you have free access. It's just a 7-day delay in data. You can see where is the fear and greed index. You can see what is the sentiment in the market, how is the social media sentiment, and everything. So take care, don't panic, don't trade. See you. Bye-bye.